What if the biggest obstacle between you and consistent profitability isn't your strategy, isn't the market, and isn't the economy? What if it's the person staring back at you in the mirror? Every day, thousands of traders spend hours searching for the perfect indicator, the perfect entry, the perfect strategy, believing that somewhere out there is a system that never loses. But what if I told you that one of the greatest trading psychology books ever written teaches something completely different? It teaches that the market isn't your biggest opponent, your own mind is. You can have an incredible strategy, a solid risk management plan, and years of knowledge. But if you can't control your emotions, none of it matters, because the market has a way of exposing every weakness you don't even know you have. It exposes your fear when you're about to take a loss, your greed when you're making money, your impatience when nothing is happening, and your ego when you think you finally mastered the market. This is why some traders spend years learning technical analysis yet never become consistently profitable, not because they lack knowledge, but because they never learn to master themselves. In this video, we're going to explore the powerful lessons behind the disciplined trader and discover why discipline isn't something you're born with, it's something you build. And by the end of this video, you may realize that becoming a better trader has far less to do with finding a better strategy and far more to do with becoming a better version of yourself. Most people believe that discipline is something you either have or you don't. They look at consistently profitable traders and assume they were simply born with more patience, more confidence, or better emotional control. But that's not true. Discipline isn't a personality trait, it's a skill. And like every skill, it has to be developed. No one enters the market as a disciplined trader. Every successful trader has experienced fear. They've hesitated before entering a trade. They've closed winning positions too early. They've held on to losing trades, hoping the market would come back. They've broken their own rules. The difference is, they didn't accept those mistakes as part of who they were. They learned from them. They changed their habits. And over time, they built a mindset that allowed them to make better decisions under pressure. This is where most traders go wrong. They think discipline means forcing yourself to do the right thing once. But real discipline is doing the right thing over and over again, even when your emotions are telling you to do the opposite. It's waiting for your setup when you're desperate to trade. It's accepting a loss without trying to win it back immediately. It's following your plan after 3 losing trades in a row. And it's following the same plan after 3 winning trades in a row. Because discipline isn't tested when everything is going well. It's tested when you're under emotional pressure. Anyone can follow a trading plan after making money. The real challenge is following it when you're frustrated, when you're afraid, or when you're convinced you know better than the market. That is the psychology of a disciplined trader. A disciplined trader doesn't eliminate emotions, they simply stop allowing emotions to make decisions. And once you understand that, you stop chasing the perfect strategy and start building the mindset that allows every good strategy to work. One of the most powerful ideas that Mark Douglas shares is that the market is completely neutral. The market isn't trying to reward you, and it isn't trying to punish you. It doesn't know that you need to recover yesterday's loss. It doesn't know that you're trying to pass a challenge account, and it certainly doesn't care how confident you feel about your next trade. The market simply moves. Yet many traders treat every trade as if it's a personal battle. When they lose, they feel like they've failed. When they win, they feel like they've proven they're smarter than everyone else. This emotional attachment is exactly what Mark Douglas warned traders about. Because the moment your self-worth becomes connected to the outcome of a single trade, fear becomes stronger, greed becomes stronger, and discipline becomes weaker. A disciplined trader sees each trade differently. They don't expect certainty. They don't expect every setup to work. They understand that even the best trading strategy will produce losing trades, and they don't take those losses personally. Instead of asking, "How can I avoid losing?" they ask, "Did I execute my plan correctly?" That one question changes everything. Because if your focus is on execution instead of outcome, you stop needing every trade to be a winner. You begin to understand that consistency isn't created by winning every trade. It's created by making good decisions repeatedly. Mark Douglas believed that successful traders think in probabilities. They know that no single trade determines their future. One trade is simply one event in a long series of trades. Some will win, some will lose. But as long as they continue following an edge with discipline, the probabilities can work in their favor over time. This is one of the hardest lessons for any trader to accept, because the human mind wants certainty, it wants guarantees, it wants to know exactly what will happen next. But the market offers no such promise. The disciplined trader learns to become comfortable with uncertainty, and the moment you stop demanding certainty from the market, you stop fighting reality. That's when your confidence stops coming from predicting the next trade and starts coming from trusting yourself to follow your process, no matter what the outcome may be. Another lesson that Mark Douglas emphasizes is something that most traders never truly understand. Your biggest battle is not with the market, it's with your beliefs. Every trader enters the market carrying beliefs that were formed long before they ever placed their first trade. You may believe that being wrong is unacceptable. You may believe that every loss means you're failing. Or you may believe that if you work hard enough, you should be able to predict exactly what the market will do next. The problem is, the market doesn't reward those beliefs, it challenges them. Every losing trade forces you to confront your fear of being wrong. Every winning streak tests whether you'll become overconfident. Every period of slow market movement tests your patience. The market is constantly revealing parts of your psychology that you may not even realize exist. That's why two traders can use the exact same strategy, take the exact same setup, and achieve completely different results. One trader follows the plan without hesitation. The other exits too early because fear takes over. One trader accepts the loss and moves on. The other immediately takes another trade to recover what was lost. The strategy didn't change. The market didn't change. Only the psychology changed. Mark Douglas believed that consistent success begins when you stop trying to control the market and start learning to control yourself. Because the market will always be uncertain. There will always be unexpected news, unexpected reversals, unexpected losses. But your response to those events, that is something you can improve. You cannot control the next candle. You cannot control whether your next trade wins or loses. But you can control whether you follow your trading plan. You can control your position size. You can control whether you accept the risk before entering.
and you can control whether you remain disciplined after the trade is over. That shift in focus changes everything. Instead of trying to control the uncontrollable, you begin mastering the only thing that has always been within your control, your own mind. And that's where the journey of every disciplined trader truly begins.
Mark Douglas also teaches that one of the greatest mistakes traders make is believing that confidence comes from winning. At first, that idea sounds reasonable. After all, when you win several trades in a row, you naturally feel more confident. But what happens after your next losing trade? That confidence disappears. Why? Because it was never real confidence. It was confidence built on results. And anything built only on results can disappear just as quickly as it arrived. Real confidence is different. It doesn't come from knowing your next trade will be a winner. It comes from knowing that no matter what happens, you will respond the right way. A disciplined trader isn't confident because they're always right. They're confident because they trust themselves to follow their plan. If the trade wins, they don't become arrogant. If the trade loses, they don't question everything they know. They simply move on to the next opportunity. That's the kind of confidence Mark Douglas wanted traders to develop. A confidence that isn't controlled by the market, because the market changes every day. Some days are easy. Some days are unpredictable. Some days your edge performs exactly as expected. Other days it doesn't. If your confidence depends on the market, then your emotions will rise and fall with every trade. But if your confidence comes from your discipline, the market loses its ability to control your mindset. You stop celebrating because you won one trade. You stop feeling defeated because you lost one trade. Instead, you judge yourself by one standard. Did I follow my plan? If the answer is yes, then you've already succeeded regardless of the outcome. That way of thinking may sound simple, but it changes everything. Because once you stop measuring success by individual trades and start measuring success by the quality of your decisions, you begin thinking like a disciplined trader. And that's exactly the mindset that separates those who survive in the markets from those who are constantly controlled by them. As you begin to understand these lessons, you realize something that completely changes the way you see trading. The market was never your biggest problem. The indicator wasn't your biggest problem. The strategy wasn't your biggest problem. The real challenge was learning to think differently. Mark Douglas believed that every trader has the ability to become consistently successful, but only if they're willing to change the way they think. Because profitable trading doesn't begin when you find a better setup. It begins when you stop allowing fear to control your decisions, when you stop chasing certainty, when you stop trying to predict every move, and when you finally accept that uncertainty is part of the game. The disciplined trader understands that every trade is simply another opportunity, not a verdict on their intelligence, not proof that they're a good trader, and not proof that they're a bad one. It's simply one event in a long journey. That way of thinking creates freedom. Freedom from fear, freedom from greed, freedom from the emotional roller coaster that destroys so many trading careers. And once you're free from those emotions, you no longer feel the need to force trades. You no longer panic after a loss. You no longer become overconfident after a win. Instead, you trust your process, you trust your preparation, and most importantly, you trust yourself. So if there's one lesson you should remember from the disciplined trader, let it be this. The goal is not to predict the market better than everyone else. The goal is to become the kind of trader who can make the same disciplined decision again and again, regardless of what the market does. Because in the end, the traders who succeed are not the ones with the most knowledge, they are the ones with the greatest self-control. Master your mind, and you'll begin to master your trading. Thank you for watching. If this video helped you see trading from a different perspective, consider subscribing for more videos on trading psychology, discipline, risk management, and the mindset of consistently successful traders. Until next time, stay patient, stay disciplined, and remember, the greatest edge you'll ever have in the market is the one you build within yourself.